Welcome to the World Financial Symposium's Market Spotlight webcast series. Today's conference will start in a moment. The WFS is dedicated to educating technology leaders through webcasts like these and the Growth and Exit Strategies Conference Series held in London, New York, Silicon Valley, and other tech and financial centers around the world. The speakers and sponsors of these live events read like a who's who of industry leaders. To learn more about our live events for CEOs, owners, and investors, or to access our library of on-demand Spotlight webcasts covering markets like IT security, health tech, gaming, and more, please visit WFS.com. And now, let's join today's Market Spotlight webcast.
Good morning, good afternoon, or good evening. Wherever in the world you are joining us from, I want to thank you very much for attending today's Market Spotlight. I also want to thank the World Financial Symposium for the opportunity to introduce Quorum's top 10 disruptive trends and to focus on digital currency flow. I've been fortunate to participate in a few of their Growth and Exit Strategies conferences in the past, and I highly recommend you find your way to one of their upcoming events later this fall. I typically introduce myself as one of the luckiest people you will ever meet. Many times in my career, I've been at the right place, at the right time, with the right team, the right market opportunity, the right market solution, a little bit of capital to work with, and some luck to build a business that I had a successful exit from. In the early 2000s, I founded a transaction and payment processing company. We had raised $25 million in venture money, and I eventually merged it with a larger company. Since then, I've remained active in many related technologies. I'm excited to be hosting this Spotlight event. Our agenda today includes an in-depth M&A research report from Becky Hill, a panel discussion, a few closing thoughts, and time-permitting Q&A from our audience. If we are unable to get to all of the questions during the Spotlight, we will follow up via email, so please submit your questions throughout the Spotlight. In January of each year, Quorum publishes an annual Tech M&A report and share the updated top 10 technology trends for the year. The trends focus on where are the leading technology mergers and acquisitions taking place, and where are the global buyers acquiring. For more details on all of them, you can receive a copy of the report by emailing me after the Spotlight. The key to notice is the interaction between the trends. Our digital currency flow is at the heart of composite commerce. Blockchain as a technology component inside focused IT services for subject matter expertise. And data security is also a key aspect. Today we will share information specifically about digital currency flow. The big story in digital currency flow right now is how it's driving payment mega deals that Becky will be highlighting in her report. About 20% of payment deals last year were platform acquisitions by private equity, which implies an appetite for bolt-on acquisitions going forward. Last year, the Starbucks app processed more payments than Apple Pay as a full-featured platform. Mobile payments have shown continued acceleration and growth, too. Last year, the USA grew mobile payments by 25% to over $134 billion, while China, with significantly larger adoption, processed over $9 trillion. The disintermediation seen in China is that the credit card companies Visa, MasterCard, and Amex are not leveraging their user data collected around mobile purchases. And the mobile payment processors are able to maximize better use of proximity marketing and long-term user purchases to drive composite commerce, another key top 10 trend. Since the early 2000s, there have been extensive market and technological advances, expansion of channel access and delivery, as well as AI, machine learning, and leveraging data analytics to offer the greatest amount of user satisfaction to date. There's a lot farther to go, but market activity is growing every year. The ecosystem continues to expand and evolve, too. The sheer number of active market participants is a veritable who's who in the financial services industry, with a rapidly increasing number of new market entrants leveraging state-of-the-art technologies to carve their market niche. The online and digital payments companies is where we are finding a large percentage of early stage and venture investments being made. The key takeaway is that as the complexity of payments evolves, the market opportunities create new market entrants all the time. Great ideas that solve problems will always have a home in the ecosystem. The startup map for Bitcoin and blockchain is exploding with new entrants, new technologies, new markets, new solutions, and new companies are being integrated every day. Quorum has been involved in a number of deals recently where the digital currency flow trend has been an important driver. Here are a few examples, including deals in healthcare, gaming, and other specific markets where currency flow is an important component, as well as specific payment solutions like PayTrail and Creditron. You can find more information at the Quorum website under the Transactions section. Now to Becky Hill, a research analyst for the Quorum Group, to give us an updated research report. Take it away, Becky.
Thanks, Rob. We start with a brief history of M&A activity in digital currency flow. Since 2013, the number of deals impacted by this trend hasn't fluctuated much annually, though we did see a peak in the first half of 2016 with a total of 99 deals. However, the total deal value spiked significantly in the second half of last year, rising to an impressive total deal value of $25 billion, where each half year's total deal value hasn't exceeded $9.4 billion since 2013. This is due to an impressive 5 mega deals that took place after July of last year. Looking at the first half of this year, the total number of transactions in this space is about the same as the total from the first half of last year. However, the number of mega deals has more than doubled, thus doubling the median and largest deal amounts. Deals in digital currency flow vary greatly in terms of size, though most fall between the $100 and $500 million range. We also see a notable uptick in deals under $20 million, which are now on pace to double from last year, and the number of deals in the $100 to $500 million range are set to nearly triple. Following the trend we also monitor in Quorum's monthly webcasts, mega deals are projected to reach their record level over the past 5 years as buyers are being forced upstream due to lack of supply. The top acquirers in this trend are all strategic acquirers, proving that the trend goes far beyond the reaches of Bitcoin. The bulk of targets in this space over the past 5 years have been, at most, 10 years old. However, 20% of the acquisitions in this space during the same time frame have been of companies that are 20 years or older. Therefore, if your company fits into the digital currency flow trend, it can be acquired at any point in its lifetime. Taking a narrow look at just publicly traded payment technology companies, EBITDA multiples are at their highest since June of last year, whereas sales multiples have dipped slightly since April. Looking at M&A metrics, the transaction processing deals are running similar to the payment technology companies. However, SaaS and transaction security multiples are significantly outpacing their public counterparts. An example of one of these high valuations is Relx Group, which acquired anti-fraud software and SaaS provider ThreatMetrix for $821 million and almost 12 times sales to improve its approach to fraud and identity risk management. Looking at our first mega deal, PayPal purchased Swedish iZettle for $2.2 billion and an impressive 19 times sales to strengthen its platform and bring it to 11 new countries, particularly in the LATAM region. In another mega deal, applying the digital currency flow trend to the medical space, Inovalon picked up data integration SaaS provider Ability Network for $1.2 billion and 8.6 times sales in March this year. With significant friction points in medicine, consumer demand for faster payment means medical buyers will be looking for more acquisitions like this. In another medical deal in February, R1 RCM acquired medical billing and insurance claims processing services provider Intermedics for $460 million and 2.4 times sales to expand its footprint in revenue cycle space and improve its ability to integrate revenue cycles across care settings. Looking at another mega deal, prepaid card provider Blackhawk Network was taken private by P2 Capital Partners in Silver Lake for $3.5 billion and 1.9 times sales in January. In March, mobile parking payment solutions provider Easy Group was acquired by PE firm Vitruvian Partners to accelerate its international expansion. Real estate payment company ClickPay was bought by RealPage for $218 million and over 11 times sales to expand its footprint into the HOA owner-occupied segment of real estate. Online fundraising services platform JustGiving was acquired by cloud software solutions provider Blackbaud for $120 million to add to its TeamRaiser and Everyday Hero platforms. Mid-last year, Fiserv paid $89 million and 1.2 times sales for mobile banking and payment services provider Monetize to expand its suite of technologies for financial services. Just 1 month prior, Ebix acquired Mumbai-based payment solutions firm ItsCash for $76 million to foray into new areas, such as credit, insurance, and healthcare. Moving into Australia, Victoria-based MYOB picked up electronic payment provider Paycorp to develop the first-to-market integrated payment and accounting solution. Finally, the financial branch of Germany-based Daimler, also the parent company of car manufacturer Mercedes-Benz, acquired mobile payment solutions provider PayCash to build its own electronic payment service, dubbed Mercedes Pay. Now, back to Rob with our panel.
Thanks, Becky. Lots of great insight and information. Be sure to remember that the second Tuesday of each month, Quorum does a webcast with additional updates on trends, valuation metrics, and research. And now, to begin our panel discussion, I'm joined by David Post, Blockchain Strategy and Platform Growth Leader from IBM, here to share insight into IBM's focus for blockchain and their market approaches. Next, we have Darren Klum, founder and CEO of Secured Squared, a leading security company focused on applications and blockchain. And finally, we have Greg Coella, Director of M&A for Fullsteam, a leading company in payment and transaction processing focused on M&A. Welcome to you all. I think starting with you, David, what are some of the demands you're seeing in the market in regards specifically to blockchain and digital currency flow?
Yeah, I think there's an increasing interest in blockchain across industry, and I think that the financial service industry is no exception to that. We're involved in a variety of different ways with financial services institutions. You might have seen recently we launched a stable coin with Stellar, which basically will help entities use digital currency as a mechanism of payment. We operate a blockchain network based upon cross-border payment that is a great improvement in terms of our functionality of moving money across borders. And then, of course, we're looking at innovative ways to help clients consume blockchain-based services. So we recently announced something with CLS. Basically, an app store called Ledger Connect provides financial services institutions to consume distributed ledger technology, aka blockchain, whether that's KYC, post-trade processing and reconciliation, sanction screening, collateral management. There's a lot of demand for these technologies, and I think the market is really looking for ways, whether that's through a consortium or through more of an app marketplace approach, to really utilize, test, experiment, really attempt to figure out the ways that blockchain technology is going to continue to shape business. So I think there's interest around specific business processes that can relate to technology, but more so it's the business model. How are organizations going to be able to collaborate around shared business processes in a transparent, secure, and trackable, audible type of way?
Great, David. Thank you so much. Yeah, I think the recent announcement with Ledger Connect is going to be very significant with regards to the whole Sphere ecosystem with regards to transactions and processing, and very clearly these settlements and cross the borders and things. Darren, what are you seeing with regards to Secured Squared and some of the demands that are coming with regards to the security element?
Blockchain is a very interesting technology because really the premise behind it is really with security and that immutability built into it. And at Secured 2, some of the large enterprise customers that we're working with really want to move to more of a verification-based system for identity, and blockchain does a really great job of kind of establishing that digital identity, because the blockchain isn't just based on username and permissions associated with accounts anymore. It's really about that identity becomes a transaction that can be part of the ownership of a private key and the ownership of a digital asset. So this kind of places a new way to manage that identity for these large corporations, I think is very exciting for them. Another thing we're seeing as a very important trend is the tokenization of a physical good. So again, many of these large enterprises that we're working with want to use this blockchain technology to be able to place that physical good with a non-sensitive equivalent like a token, so they can now create a secure way to eliminate fraud and counterfeiting in their supply chains. So as you know, with these very large manufacturers like Medtronic, well, how do you know if a device was actually made from Medtronic when you're buying it, or how do you know it's not a knockoff from China? So I think blockchain can solve a lot of those problems. And I think another big one, we're working with a lot of banks right now, and as the banks are trying to figure out how to become more secure, blockchain is really ideally suited for those banking transactions to eliminate fraud and have that immutable record in any transaction. You hear about blockchain more around Bitcoin, but blockchain actually has great uses with our current monetary system. So I think you may see kind of a hybrid approach that banks are going to use, where maybe they'll do some stuff in the crypto space, but they can also apply blockchain just to their basic business process.
Yeah, great. Thanks, Darren. I think part of what you're mentioning, the tokenization of the physical goods and the transactions there and then supply chain, I think IBM is kind of a leader at doing that with even national commercials with regards to farm to table, and how the auditability and trackability and confirmation of the goods and the tracking of it is key as well. Greg, with regards to transaction payment processing, what are some of the demands and the needs that you're seeing in the space?
Sure. So Fullsteam, we're a little bit farther down the disruption chain and don't spend a ton of time on blockchain or cryptocurrencies. Really what we're trying to do is bring clarity to the relationship between a software company and that software company's customers with regard to electronic payments, both ACH and credit card. What we see is dated technology, slow-moving large enterprises that are currently partnered with software companies in order to process electronic payments, which leads to all sorts of problems. Primarily, I think it inhibits a software company's ability to serve their customer how they want. One of the issues there is around reporting. And so, you may have a software company that's telling one of its customers that so many sales happened in a certain day and so many refunds were given, but that does not marry up with a credit card processing statement that comes in. So you're left with a confused business owner whose software, their software is telling them one thing, their payments processor is telling them another thing, and there's really zero transparency in the amount of fees that are charged, and when certain transactions are going to get settled and which ones were hit with additional fees. And it inhibits software companies' ability to provide payments processing as a service working through those third-party vendors. So really what we are interested in doing, Fullsteam really is a payments company, and as we acquire software businesses, we take over their payments processing for them, our own payments facilitator model, and make sure that the reporting and the settlement marries up with the reporting and the settlement of that software company. And we have relationships with each software company, obviously, that we acquire, as opposed to some of the larger processors that, are servicing tens of thousands, hundreds of thousands of customers that are not responsive to their customers' needs.
And part of your strategy for merger and acquisitions is working inside certain vertical industries.
Yeah, that's right. Really, for the core for us is B2B2C software where, the software is provided to a small and medium business that wants to be able to have a smooth interaction with their customers in accepting online payments. An example of a vertical market software here would be self-storage facility management. Here you have sometimes relatively unsophisticated with regards to technology owners of self-storage facilities that want to be able to offer what can be a complex technological solution to their customers. And when you throw in large payments processors with dated technology into that interaction, it causes a lot of conflict. So we seek to alleviate that conflict and enable that software company to grow faster because of their payments offering.
Got that, thanks. David, I'm just curious, in the IBM purview and world with regards to the ecosystem that you guys are bringing out and working with, and the whole evolution of the smart contracts and the ability to assist and move the capital and the funds to monetization, what are you seeing with regards to trends there as well?
I think we're seeing a couple of different things in terms of digital currency flows and the tokenization of assets. So the first one I already talked about, which is how do you use digital currency to move from point A to point B across borders or wherever. I think another interesting aspect that's kind of in the pipeline is what does it mean to have a utility network, whether that be in banking or supply chain, that really provides a core functionality to a specific industry group, but also incorporates a tokenization type of dynamic. Thus far, I think tokenization and digital currency has primarily been the purview of the crypto economic side of the house. It hasn't really translated that much into enterprise. And my prediction is in the next 6 to 12 months, you're going to see interesting thing happen in the enterprise context where large companies may actually hold their own tokens or participate in networks that are based upon tokens. Those tokens may be fixed and immutable, in other words, only valuable in the context of the network. Some of them may be floating. Some of them may be a combination of the two. There's all sorts of innovative thinking going on, but I think the process of bringing tokenization to the enterprise space is still in its early days because of all the focus on the crypto space. So I think you're just kind of seeing the tip of the iceberg in terms of innovation. It may start with something like providing a digital representation of a physical asset, like was alluded to previously. It could also involve spinning up very large marketplace businesses very quickly by using the incentives that tokenization provides with a large enterprise participants that have substantial transaction volume. So this isn't necessarily confined just to financial services, but I think you're going to see over the next couple of years a lot of business process-specific networks being spun up, and I think it's going to happen really quickly because those entities that have large amounts of transaction volume can have a stake in the network, and therefore you can much easier get liquidity on both sides of a marketplace-type business.
Yeah, that's very interesting, David. Thank you. In fact, the U.S. Federal Reserve had recently published a report getting that in the United States, every day there are 600 million financial transactions, and it ends up being about $12.2 trillion moving in the financial system on a daily basis. And they've come to a conclusion that 20-25% of the cost of moving the capital and the funds across the network will be removed or reduced through the utilization of blockchain distributed ledgers and tokenization. So I think, as you said, we're at the very beginning stages of seeing that, and I think it's going to have a huge dramatic impact in the whole financial ecosystem. And Darren, I'm curious if you wouldn't mind just giving a bit more information with regards to exactly how Secured Squared is handling and managing the security around it and just some of the utilizations of the technology that you have that are just so unique and different.
You know, Secured 2 and Secure Squared, we've developed a pretty interesting way to look at data and really revolving around some of the emerging threats around quantum computing and advanced supercomputing techniques that pose severe challenges for basically cryptography as a whole. So if you look at blockchain right now, everything sits on SHA-256 encryption, and this whole idea of the immutability of the blockchain is really sexy and awesome for many applications, but at the end of the day, we have these emerging threats that are coming, and I'm like, you know, here's one that is very well known and very well understood, and one where I believe our security can really have solved a lot of problems. Look at DAO, for instance, and what happened with Ethereum. Here you have a situation where you had a security protocol in a way that everything was constructed and using Ethereum without any really clear standards, without a very well-defined map on how to implement security properly for Ethereum. DAO ended up getting $50 million stolen from them, and basically a hard fork gets created with Ethereum. And now you kind of have two different currencies now that are splitting, and I don't know what side people are choosing, but you know, some want to be purists and say, hey, we need the route where there's nobody controlling anything, and then others are choosing the route of we have to give these poor people their money back. So these are technology challenges that come with any brand new emerging technology and things that Secured 2 is very heavily focused on. So it's kind of the implementation of the security. It's creating these new ways to secure the blockchain using our technology. And then another big area we're focused on is the endpoint, because a lot of the hacks that you're going to start seeing happening around Bitcoin and the blockchain are going to really be focused on the endpoint. And that's, you know, password hacking, malware attacks, Trojans, keyloggers, there's a list that goes on and on. But, you know, it's really how do we secure that endpoint better, and how do we leverage our exciting, you know, quantum resilient technology to solve those problems. And there's also another really big security challenge that we're focused on, and that's the 51% hack. If you can control 51% of the nodes on a blockchain network, effectively you can overpower other network members and allow them to approve or disapprove transactions. So, you know, how do we solve those types of problems? So these are all the kind of different challenges we're looking at, and not going to be a silver bullet, but these are all solvable problems. I think problems that will at least be at the front of the line solving.
And I know you also have a very good technology with regards to compression and the reduction of energy and things that it takes to be able to keep the network together and functioning.
But, you know, that actually in itself is a very interesting thing, because as we've been looking at how do we build a better blockchain, one thing is very certain, that we have to build a blockchain that doesn't require so much CPU horsepower. So, you know, if you look at how we're doing it today, anybody with half a brain knows how does this scale at the level of adoption. So those are areas that we are keenly focused on of, you know, how do we create this newer blockchain that doesn't require so much resource and energy.
Thanks. Greg, what additional trends or what things are you seeing with regards to just the whole payment processing, and more importantly, the ability to stand people up and to be able to get them in the transactions and get them with the level of reporting and continuity and consistency there? What else are you seeing?
Yeah, one of the things that a small software company would often like to do but can't do is get their customers set up with their own processing merchant IDs. And that's something that is a huge value proposition of the Full Steam platform, is that with our payments facilitator model, we can allow a software company to go out and stand up one of its customers through the merchant ID process. We take on the workflow and the KYC risk there and have a compliance department that takes care of that. But it's something that can really put the ownership of payments processing back into the software company and back into the merchant's hands. A lot of times they are at the will of large payments processors and the banks in terms of when they get paid and how they get paid and you know, their success rate on chargebacks. But that's something that is very important and is a core value proposition at Full Steam, is to be able to give software companies the technology and the workflow to stand up their customers with their own merchant IDs in a compliant way.
Great. Thank you. Thank you very much. Dave, is there any other additional insight or input you'd like to share with us with regards to just where IBM is going with blockchain?
I think that I've covered most of it, but I would say that we have a very keen interest right now in trying to identify other organizations that we can work with to create networks. We obviously provide blockchain services and blockchain technology, but if you believe what the analysts say, over the next 10 years, about 90% of the profit pools in the blockchain space are going to be through network ownership. So we have a strong focus and desire to partner with organizations to establish networks in different business process or industry areas. That's a big focus at the global level for us as a team right now.
Great. Thank you very much. Yeah, I can see the huge long-term payoff and value there in having the network and the complete platform. Darren, any additional comments you'd like to share?
Yeah, that was actually a really interesting thing you just said, and it kind of reminded me of something. A lot of people don't realize that blockchain really is just a cryptography-based technology, and there's actually hundreds of different blockchains that are all being built. And all of these different use cases and development efforts are really being done by a lot of different groups around specific, applications of the technology. Where I think that the challenge becomes is, how do we start applying some standards, and how do we start understanding what's a trusted blockchain? What's really in the dog food that we're eating when we use blockchain? Because I do have some concerns, as the most popular blockchain platform in the world, Ethereum, came out of the Russian development community. And, not that we want to say that anything bad would come from, Russia, but you do have to wonder. And as technologists, we have to start building models of trust. And what do those models really look like? And how do we get people that may not be so technically savvy to understand, can we trust whatever it is that we're using? So I think there's some interesting dilemmas that are going to come as we see blockchain evolve. Again, I think what we're trying to do, at least with our approach at Secure Squared, is, let's ensure no matter what that you have security that can be vetted by the entire community, no matter what blockchain, and make sure the underpinning of the technology is completely sound. And I know IBM has done a wonderful job of working this process and creating standards. And so I think you're going to start seeing the really big boys validating blockchain by doing these types of things, but there has to be some kind of a standard that we can all live by to know what's really in the stuff we're using.
So, what does this mean for M&A?
Well, I think that the M&A industry is going to see a lot of activity as we look at blockchain, and, as these big companies try to figure it out and add this capability, they're going to want to have the resources to do it. And then, we're seeing a lot of these really big global companies that will be adopting the blockchain, for their various supply chains and et cetera. They just don't have the developers or the technologists, so they're going to go out and try to acquire that by acquiring the companies that are doing it. So I think early on you're going to see big companies acquiring, these really intelligent blockchain technologists and developing the technology and integrating it into their companies. And then blockchain grows and grows. I think that there'll be a lot of M&A activity and a land grab to acquire that early talent. And then kind of the second wave of blockchain, to me, will be really the successful companies that are grown from blockchain, that are, producing revenue, have customers, and actually have viable business models. And you're going to see those companies either acquired or going public, et cetera. So I think there's kind of those two phases, the early phase, which is, acquiring the talent. So that's where you'll see a lot of activity. And then I think the second phase is big companies that have been grown out of blockchain that get acquired or sold, or because those companies want to get liquidity.
Great. Thank you. Thank you very much. And Greg, any additional input or comments you'd have with regards to payment processing and transactions?
From my end of the disruption chain, which is still using traditional credit card, we're still seeing a lot of people using chips and swipes and card-not-present transactions. And while these technologies with blockchain and Ethereum are rising quickly, I do think it's going to be a long time before it makes its way down to your individual customer in a third-tier city trying to pay for their self-storage facility. But we know it's coming, and we just want to spend time thinking about how to make kind of the existing transaction infrastructure more smooth and more secure.
Great. Thank you very much for your time. David, Darren, and Greg, I appreciate your guys' input here, valuable information, and thanks again.
Thank you.
Thank you.
Thanks, Rob.
Thanks for wide-ranging perspectives. And now some closing thoughts. Digital currency flow will continue as a major disruptive trend for 2018. It has been a trend for a few years and will continue to be based on the increased levels of investment dollars and M&A activity in the space. The acquirers are internationally diverse, financial, strategic, platforms, and bolt-ons. As seen from Becky's report, the increased mega deals and increased number of transactions taking place. Blockchain is evolving, growing, where significant amounts of investment capital is continuing to flow. The panel shared some great insights as to the evolution of the trends and timing for expansion of vertical industry utilization. The reduction of friction, the ease of movement, and security are critical. Expect the pace to increase as big data is leveraged into better capital management and even peer-to-peer money transmissions grow. Mobile in North America and Europe has a lot of catching up to do to be on par with the Chinese market, and it is happening. Stay attuned to it. Consolidation is happening. Not being in the market means your competition may get acquired. Increased vertically oriented acquisitions is an area of increased activity. Now, it appears that we have gone a little bit beyond our timetable here. Let's see if we have some chance to maybe fit in a question or so. Oh, I guess we're out of time here. With the end of Q&A, let's go to our close.
We hope you enjoyed today's online symposium. If you have any questions not answered, please submit them to info@wfs.com. We look forward to seeing you at one of our upcoming live events in a city near you. To register for these live events, view upcoming webcast topics, or hear rebroadcast of this or other market spotlight events, please go to wfs.com. Thank you for attending today's webcast.